Today we're going to be talking about how to choose a mortgage lender in 2022. It's probably something where you're like, well, I know how to choose. I need to look for the lowest rate. Yes, rates are very important, but what you actually need to also look for is, and I wrote it down because I was talking to a client about it, will the lender go out of business in the middle of your loan? Yeah, guys, this is 2022, so let's talk about that. 2020, 2021, huge, incredible amounts of business. You could be a terrible lender, a crap company, and you were still gonna get a bunch of business because rates were so low. The consumer demand for loans was so huge, right, that really the bar of doing a loan was really low. Like, I literally had loans where people were like, oh my God, you're the sixth lender I called and you called me back. And I'm like, what? Who are these people not calling people back? Like, hello, this is how we make money, calling you back. But yeah, you could literally be a terrible lender in the last 2 years and get business. You could be a company that treated clients like dirt and you could get business. You could be a client that was charging, a company that was charging clients higher rates, higher fees, you would be getting business, okay? This year's not like that. This year is what I have called the Hunger Games of lending. Yeah, it is only the strongest will survive. I mean, I love years like this. I know it's gonna make me seem like such a mean person, but I'm not. It's client focused. So here's the deal. The last 2 years, people weren't being treated well by the industry as a whole. Like, yes, there's some really good lenders that treated people great, but there was a lot of abuse going on. And the companies that weren't taking good care of people, the loan originators that weren't taking good care of people, they are starving out. Okay. However, they're not all gone yet. And so what we're seeing is a couple different things. Number one, I am seeing more predatory behavior than I have in the last 5 years. So I've had multiple people sending me loan estimates where they go, Jen, I don't think this looks right. And I look at it and I go, holy hell, this isn't even legal. So what I'm seeing is that there's certain lenders charging tons in points. So what points are is it's a way to lower your rate. However, there's legal thresholds that we're allowed to charge, and you can only charge so much. So what I'm seeing some lenders trying to charge 6 points. Like, what is that? And you know, for me, as soon as I see that, I'm like, wow, that person knows nothing about lending. Let me check their license. And I check their license. I'm like, 2021. Oh, baby, welcome to the end of your career. Right? Because that's the thing, like, what you guys need to understand is there's a lot of loan originators getting into the game in 2020, 2021. They didn't need to know guidelines. They didn't need to know regulations. They didn't need to know anything. All they had to do was answer the phone. That doesn't work in a year like this. Okay? So the dominant business right now is purchase. And you guys, if you're looking at buying a house, you need to make sure that the lender that you're working with, number one, does purchase. So if you're calling something like, you know, usually it's the ones, if you go to those websites, right? And it's like, we compare lenders for you. Guys, those are call centers, okay? It's called a lead aggregator, okay? And so the lead aggregator gets your information, right? By saying they're giving you a service, and then those companies pay the lead aggregator to get your information and to compete for you, right? And you're like, well, that's great, right? Well, most of those companies, all of those companies I can think of, they're call centers. Call centers do not have the best loan originators in the country. The reason is the best loan originators in the country, they don't pay for leads, right? Like, for instance, do I pay for leads? Absolutely not. No way. No way. No. Do I pay to promote this channel sometimes? Absolutely. But am I paying for leads? Absolutely not. Absolutely not. Absolutely not. And as you can tell, I don't pay very much to promote it since there's like 12 subscribers. Yay, 12 friends. Anyways, so, sorry, the chair's squeaky. Anyways, you really want to be careful with those sites because what people don't understand is that the individual originator you're working with really matters. You know, it matters if they can structure a loan. In a purchase environment, you have to be able to close quick. There's a lot of people who got into the market in the last 2 years who are doing just refis. They don't know how a purchase market works. And also they're used to closing stuff in 60 or 90 days. The customer doesn't really matter. That doesn't work now. Okay, so we're seeing a lot of that part of the business go away. So what we'll see is like, I'll get the calls where they're like, well, I've been working with 2 different people because they left the company, different companies. Well, okay, here's the thing. If people are leaving companies, it's one of 2 reasons. Number 1, they're either going to another company because they think there's a better opportunity, or number 2, and what's more common this year, is they got let go for lack of production. Yeah, if you don't do loans, why would the company want to keep you there? They're not going to. So we're going to see a lot of lenders being pushed out of the market because they're not able to get business in this highly competitive market. Okay, so as a buyer, you don't want to be in a position where you've been working with Paul for the last 6 months. Paul's no longer a lender because Paul can't pay his bills. Okay, the other thing you need to be concerned about is the company going to go out of business. Yeah, Google mortgage companies closing, and I think we're going to see a lot more of it happening. So 2020, 2021, money, you could make it like throw a rock. Once again, so easy. Oh my God. It was easy to bring the business in. My God, that was a lot of business to close. But this year's different. So companies that were set up as refinance chop shops, as I call them, they're going out of business. Of course they're going out of business. They don't have any purchase business. How are they going to survive? And if you guys are like, well, I'm sure there's still refinances. Let me give you an example. I looked at my pipeline for the last 4 months. Do you know how many refinances I've done in the last 4 months? 0. They're all purchases. They're all purchases. And the reason is rates were so low in the last 2 years, there's not a lot of good reasons to refi right now. And I'm the first person to say that. So if you're talking to a lender that's saying, oh no, refinancing makes sense, and you're not sure, call me. I'll tell you if it makes sense or not. Because in more cases than not, it does not make sense to refi right now. If you're desperate for money, get a HELOC, but I would not touch. If you have a 2.5, 2.6, 2.8 rate, you hold on to that like it's your baby and you do not let it go. Okay, so companies are going out of business. There was actually a company in Texas recently that was I thought it was a pretty decent mortgage size company. They're out of business, and we're going to keep on seeing this. Now, someone may go, well, if they go out of business, they still close my loan, right? No, guys, if you're in contract to close on your house and the mortgage business fails, your loan doesn't close. You're starting from scratch. Yeah, and it's probably going to be a couple weeks of everyone trying to figure out what to do before you know what to do, right? So you want to make sure you're working with a mortgage company that's not going to go out of business because they no longer have refis. So you're like, oh my God, Jen, how am I going to figure this out? Okay, so yes, rates are important, but if you are leading with who's going to show me the lowest rate online, you are leading yourself into a call center. Right? That is how they advertise. That is how they get you. The top originators in the country, they are not doing stuff like that. And it's not because they have higher rates. It's just not the way the business model works. It's like, oh, I'll think of an analogy. That one was really inappropriate. That one is, okay, I'm not gonna do analogies today, no analogies. So how can you guys as a consumer find a lender who A, can close your purchase business, B, can structure the loan properly, C, give you a great deal, and D, their company's not gonna go out of business? Okay. Third-party reviews. I said it so many times, and it always boggles my mind because I'll have people say to me, hey Jen, I'm shopping for lenders, and I'll say, okay, great, tell me about the 3 other ones. I'm usually, 4, whatever. They're like, yeah, well, I'm like, well, how are their reviews? Well, I don't know, I just asked them what the rates were. Okay, why don't you look up the reviews and tell me how people are talking about them? Because that's the thing. The reason Yelp, Google reviews, Zillow reviews exist is so that you guys as consumer can see what the real deal is. There's a lot of lenders that just spin yarns of bullshit. None of it is real. You look at the reviews, they have like 2 stars or 2.5 or 3, and people are saying, they lied to me. They promised me this. I got this. I was deceived, right? Shouldn't you guys be looking for that information to make sure it doesn't happen to you? Yeah. Yeah, I mean, guys, I don't even go to restaurants now without checking the reviews because I want to know if the French onion soup is going to make me sick, right? Don't you? Okay, but then people do this for restaurants, but then with lenders, they're always like, oh, yes, individual lenders, they're your French onion soup. Look at them and make sure they're not going to make you sick and steal your money. Seriously, I am hungry. Okay, so We've covered that you need to be worried about, is your mortgage lender going to get fired because they don't do enough business? Is your mortgage company going to go out of business because they're not doing enough business? Does your lender actually know how to do a purchase? Because there's so many new lenders that came in the last 2 years that have never done a purchase. And how you have to watch out for predatory behavior, right? Because we are seeing, like, as the Hunger Games, people get really desperate to stay alive, as you'd expect. They need to pay their mortgage, they need to pay their kids' bills, they need to pay for their car. So they're gonna do whatever they can do, right? They're gonna do whatever they can do to make it so they can take care of their family. You don't want them to do that with you, right? And there's an easy way, a very easy way to avoid all of this. Look at third-party reviews. If a lender's been in business 5, 10, 15, 20 years and they don't have any reviews, that is super weird. It is super weird. I don't even know how you can be that neutral that no one loves you to brag about you or hates you to talk trash about you. I think it's highly suspect, okay? What we see more often than not is we see either really positive reviews or negative reviews, right? And that's what you guys should be checking. So that is how I would look for a mortgage lender in 2022. I think that we're gonna end up in a position where a lot of people are calling us because their mortgage companies have gone out of business. So if that's happening to you right now, you're in contract, the mortgage company you're working with has gone out of business, call me right now so I can step in and we can close your deal. I am at 707-478-0637. I'm licensed in 48 states, everywhere but Rhode Island and Utah. Rhode Island because I haven't done it yet. Utah because their education requirements are ridiculous considering what I've already done. So that is how I can help. My team specializes in purchases. We're one of the top purchase teams in the country. We get it done, okay? I've been in the business for over 15 years. You are not gonna have to worry about me disappearing, okay? Much to my competitors' disappointment, I will be sticking here for a long time, as will my company. So any questions or comments, as always, please reach out. I know this video has been a little bit impassioned, but I really know it's coming. I know it's coming. I've already gotten the calls about like, oh, I've been with 3 lenders because they keep on leaving, AKA being fired. It's not a good experience for the buyer. You don't need to go through it. It's not cheaper to work with bad people. You can pay the same price and work with an expert that will be there to close your loan and won't be unemployed. So as always, thank you for watching. Questions, comments, please reach out. There'll be a link to my calendar where you can talk to myself or someone on my team. We are here to help you.